What is going to happen to the Australian economy and the Australian housing market in 2023? In this episode, I'll talk about 7 trends that the mainstream media don't want you to know. 7 trends, 7 charts, 7 data points that family offices, sophisticated investors, wholesale investors, people effectively who know what they're doing with money, those people know these things. You and me, we may not. So if you're interested in how the elite think who don't watch TV or consume content on Facebook, then carry on watching. My name's PK and I help people build passive income through property investing using the Property Investment Accelerator, using data without needing $15,000 on a buyer's agent every single time. And this channel, we talk about the economy, talk about property and financial happiness. This is some of my best work. I'm really excited about this video. Let's go. So the first chart right here, Australian housing savings ratio. So everyone's like, interest rates are rising, savings must be going down, we're all going to default, we're all having to live off baked beans. And this chart is pretty damning. You can see as COVID kicked in, savings ratios went through the roof because effectively you couldn't spend much at all, right? You couldn't travel, go out of your house, came down and up again with the second wave of COVID. And then with interest rates rising, it's consistently that savings ratio is coming down. So this red line looks pretty bleak and dark. But the right-hand side is what the media doesn't tell you. And this is what sophisticated investors trade off, whether it's in the stock market or in the property market. Okay, so what you see is the trend without COVID, the Australian housing deposits, okay, in billions. This is the actuals and this is the trend beyond this point here. You can see that the years go out to 2025. So that's the trend. So we've been going, pretty incredibly higher than the trend because of COVID, because of handouts, the economy was booming, interest rates were low. So what this means is even though the savings ratio will go down, all the way to perhaps 0%, people have these large buffers. And the whole point is that we can go down again with no additional deposits. Like it could hover around this 1450 mark in the billions, flat for a long time, years before we say that we're going back as an economy, because we're so far ahead of what we're projected to be from a deposits perspective that it's not even funny. Even if people don't become any wealthier in the next 2 or 3 years, we are exactly where we would have been anyway. What does this mean? It means that people have crap loads of money. You may not know it because it may not be you, but in a place like Sydney, a place like Melbourne, a place like the Gold Coast, Sunshine Coast, people have a ton of money, liquid or illiquid, in assets or in offset redraws accounts, cash. They are cashed up. So when investment opportunities present themselves, they will pounce. Really try to understand this second side, right? This chart here, because this is not something that many people tell you. The next chart is national flight to affordability. So the second trend that I'm seeing in the Australian property market is that generally speaking, the lower the price of the property, 150, 250, 300, 400, 450, 550, the higher the rate of growth in a quantitatively tightening cycle. So these are decile median values as at October 2021, and these are 1-year growth to October 2022. So it's the cheaper end of town that has been growing considerably in the last 12 months. And that trend will continue as interest rates continue to bite, as the economy, generally speaking, cools down, which is what we want. So if you're investing in property, don't go off and buy $1 million property, $1.5 million property. You can see that expensive properties, 1.45 million here, have performed like really badly. This is a time to buy affordable property, okay? Because you will get the growth. It will be, up to about 20-25% as per this chart. Probably next year up to about 15-20%. Don't go off and put all your eggs in one basket. Thanks for Jeremy Shepherd for this chart. The next trend that most people don't know, and when they see a chart like this, they become a little bit confused. Let me break it down for you. Household mortgage prepayments. Now, everyone's like, oh man, like interest rates are rising, foreclosures, defaults, mortgage arrears are just going through the roof. Well, let's just assess that, right? According to the RBA securitization system, what this chart is saying is that by how many months are people ahead of their mortgages prepayments? Of course, this is a few months dated now, and I'll provide updates on it next year as well. But those who are more than 24 months or 2 years ahead in their mortgage repayments, remember this includes offset and redraw money, is the largest proportion. Like it's well over 30%, almost 40% of households in Australia are 24 plus months ahead in their prepayment payments. Just let that sink in for a while. And you couple that, or you marry that with the fact that less than 40% of households actually have a mortgage. Yeah, that's pretty surprising to hear, but that's true. Like a third of households or houses in Australia are completely paid off. The other third are investors, and the other third are like these guys here who have a mortgage. So that's like a really interesting fact. Then, of course, you've got lower numbers who are 3 to 12 months, 12 to 24 months. And this might be a little bit surprising that, those people who are only less than 1 month ahead of their mortgage prepayments are under 30%. But that's still well above the long-term average. Like long-term average, people who are even ahead of their mortgage prepayments are not this much at all. Okay, that's really, really interesting. And check this out. Those who are on a fixed rate are only a third of a third. Okay, so everyone's talking about this like massive mortgage cliff. Well, I mean, you make up your own mind. Most people are well ahead in their mortgage repayments. Those who are ahead but not as ahead, only a third of them are on fixed payments. Let that sink in for a while and let me know what you think about that. This is great data, by the way. Now, the fourth trend in 2023, and this is going to be something that just bites the economy and bites the labor force more and more, is that the number of unemployed people, right, are just going down and down and down. And remember, unemployed means those who are actively looking for work but can't find it. Okay, if you're retired, you're not unemployed. And the number of job vacancies for the first time ever, I think, like ever, it's actually more. This actually started this year. It's actually more than the number of unemployed people. Okay, so basically everyone who wants a job can get it. Of course, there's not always a perfect match of skills and experience, but you tell me, you look at this and you think, how can Australia go into a recession anytime soon? And in a second, I'll share with you our projections of different countries and what their recessionary periods and what their global economic growth, country economic growth will be. I'm getting there. But what I'd like to see in this is that, we're such a strong economy. There's not many other nations who have this kind of narrative at the moment. And of course, in the previous video, I shared how interest rates rise. The amount of time it takes for unemployment to rise is normally 6 to 18 months delayed. All right, that's a lag. So of course, this unemployment figure will likely go up at some point, but job vacancies are just through the roof, and this is so strong. I think this will continue. People have work, their wages are going up. It's hard to see how there can be mass mortgage defaults. Now, this chart, the next trend for 2023 is really interesting. Definitely something the media will never talk about because it's really boring to talk about in this angle. But family offices, those people with 10 to 100, maybe 400, $500 million worth of assets, they take careful attention of long-term trends. And what this is showing is that the building cost index, it's an index, so it's not a number here, it's just a relative figure. What it's showing, CPI, which is inflation, the red line, and then BCI, or building cost inflation, in the blue. And you can see, generally speaking, they're correlated. And what you've seen over the last year and a half is that CPI has been spiking, and so has BCI, building cost inflation. Everyone knows cost of timber, all sorts of things are going up. But what this is really interesting for me is that there is a clear tie between BCI, building cost inflation, and house prices over the long term. Because think about it, house prices structurally over the long term always peg back to how much it costs to build a house, all right? So if it costs extra or additional to build a house, in Western Sydney, Western Melbourne, Western Brisbane, all the new pockets, if it's costing more and more to get a house out of the ground, then that means that all the better suburbs, towards the CBD, those are going to cost more and more, even though they're not brand new, because it's all relative. Closer to the CBD is, generally speaking, always more expensive than far out from the CBD. So when you have building cost inflation, the new houses, they can only really be built in far out locations across cities, those rise in value. And we've seen that over the last couple of years. And so therefore, all of the housing structurally increases in value. Now, of course, in short term, there's spikes and troughs, but over the long term, the building cost is what dictates long-term house prices structurally. So what this is saying is that building costs have never really come down. I mean, here in 1991, they came down a little bit, but since that time, they've never really come down. So if building costs continue to go up and it costs more and more and more money to build a house, get multiple thousands of houses out of the ground, so to speak, then how can we envision or imagine a scenario where house prices go down by 20, 30, 40, 50% on average? Like, that would make no sense. That would mean that a place like Mossman would become so much more cheaper, relatively speaking, than it was versus Box Hill. Or it would mean a place like Richmond would be much more cheaper, relatively speaking, than it used to be versus Tarneet. Or a place like Hamilton and Brisbane becomes so much cheaper because it drops in value relative to all these new housing land packages out in Ripley and Ipswich. Like, that doesn't happen, okay? So this is a really telling indicator of what's going to happen over the medium and long term in the housing market. The next trend, I just love to see it on a chart, net overseas migration. So the number of people coming overseas, from overseas into Australia, generally it's kind of capped out at 100,000 per year. You can see that's what happened in 2008. This COVID period went backwards. It went negative. People left Australia. A lot of people going back to their home nations. There was no immigration into Australia for obvious reasons, and it's cranked back up to actually record levels. Okay, it's cranked back up to record. And now what we're expecting is that 200,000, 195,000 to be exact, migrants to come in a calendar year from overseas into Australia. So that's double what we've ever experienced in Australia. How does that hold up, or how does that impact the Australian economy? Well, this is a really cool diagram by John Lindemann that I saw. It puts it really succinctly. Demand up, so over 200,000 overseas arrivals expected each year. That's the official Treasury estimate. Supply down. There are only 50,000 rental vacancies in all of Australia right now. That's a fact. Equals rental crisis. Asking rents will boom, yields will shoot up. It's not that they will shoot up, they already are shooting up. What that means is that housing markets that were previously negatively geared become once again really interesting for property investors. Adam Smith's invisible hand means those areas that were completely unaffordable, now the rents have gone up, now they're paying for themselves, positive cash flow properties. Investors come back in and flood those markets, for better or for worse. I mean, we need it. We have to accommodate these overseas people. There's a huge rental crisis, and we know that not always, but in many cases, when rents shoot up, when yields are huge, when there's big rental demand, that is a precursor for housing demand. That's when house values, house prices shoot up, because people are like, man, I'm paying so much in rent, I might as well just buy if I can afford it. And actually, people think that renters are poor. They're not. It's not that renters don't buy houses because they're poor. In fact, statistics show that many renters rent because they're in a transition period. They're not sure if they're going to be in the city all the time. They have a part-time job that they're going to transition away, frictionally unemployed. Many of them can afford to buy. They just choose not to, right? So those people, they will buy, and those people will cause housing market to have its next boom. I can't say exactly when it will be, but watch this space in 2023. And then the last chart that I want to share with you, and I did promise this earlier, is what will happen to different countries, when will they enter into a recession, and what makes Australia unique, notwithstanding that we're at the cusp of another resources boom, which will heavily favor Australia's terms of trade. Check it out. This is by Deutsche Bank. The world economy in quarter 3 2022, they've said that it's grown by 1.2% on that quarter. Last quarter of 2022 is slightly down, or a lot down, 0.3 growth. The next year, 0.2 growth, 0.6 growth, 0.8 growth, 0.6 growth. So globally speaking, there's not like this massive depression gonna happen. But the US, it's saying at the fag end of next year, 2023, they will have two subsequent or consecutive quarters of negative growth. If you want to use that term to define a recession, then that's when the recession will be. The euro area will experience a recession, negative 0.3, negative 5, negative 0.2. In basically right now it's going on. You could probably see that from the news as well. The UK is exactly the same. The hardest hit country out of probably any in the entire world that's developed. Japan are coming out of their recession, but they're a bit up and down, back into a negative growth territory at the end of next year. China, can't really trust any numbers from China, can you? But, they're obviously coming from a weak place. 3.9% is weak, in their economy, and they're expected to become weaker and weaker before they stimulate again in late 2023. Remember, when China stimulates their economy, they build stuff. They build infrastructure. They need iron ore for steel from Australia. That's always a good thing for Australia. India, negative here, but probably one of the strongest economies next year and the following. And then Canada is also not as bad as the US, but nothing to write home about. And you can see, same as Australia, we're not expecting, or Deutsche at least, who are generally speaking quite a negative or pessimistic or realistic, you could say, investment house. They are suggesting that whilst growth is pretty modest, there's no recession likely in Australia. So I'm trying to demonstrate using this chart that, you can't just say recession, everything's going to hell. There's nuance, there's differences between different countries. And here in Australia, we're so far better than most parts of the developed world. So those are the key 7 to 8 trends in 2023 that will help inform you about what's going to happen in the local and global economy, and also what's likely to happen in the housing market. Housing market at a high level in the media looks terrible, and that's what people are saying in the barbecue. The reality, based on what people who know look at, is not that bad. It's not, trust me, it's not boom times either. All right. There are always markets and markets to make money and lose money, but it's not as bad as people think. And Australia is not as bad as people think compared to the rest of the world from an overall economic perspective. Tried to bring you data, guys, stripping away my opinion. Let me know what you think in the comments below. Smash the subscribe button, give it a thumbs up, turn that notification bell on so you get every single video pop up. And guys, always remember, more important than me is you. Level up, put the 6 inches of real estate between your 2 ears as your first priority in 2023 to level up. I'll leave links below to my Facebook group, more than 25,000 amazing community members, and my podcast on Google, Apple, and Spotify. Those links are below, and I'm so grateful that you're part of my community. I wish you a very, very Merry Christmas. I'll probably do one more video before Christmas, but if I don't, have a wonderful end of year. My name's PK. Catch you later, guys. Bye.